Hey guys, back for episode 2, and thank you for joining me. If you watched the first one and came back, God bless you. You're more man than most people. Anyway, I'm going to talk about another topic today. It's going to be like Sesame Street. The word of today is HELOC, or HELOC, as some people call it. It's a HELOC, what does HELOC stand for? Well, that's an acronym. It stands for Home Equity Line of Credit. Now, I often get asked in my banking career, why in the world would I want a HELOC? And that's a good question. It's a fair question. So I want to explain to the pros and cons of the HELOC. And the obvious cons, a lot of people talk about those, is, well, there's a lien on your house, and that scares people. People don't like that thought of that at all. I could lose my house. Well, that is a very realistic possibility if you're foolish with your money. But if you are somebody who is conscious of your financial spending and your habits, it isn't as nearly as problematic as you think it is. And what it is sometimes is a good little safety net for you, a little insurance policy. And here's a real life example that happened in my family. So let me get back. I'm jumping the gun here. Let's start what the HELOC does for you. So basically what it does, it's either a first, sometimes a second lien on your home that takes advantage of the equity you have. So for example, if you have a home worth $100,000, let's just keep it simple, and your mortgage is about $60,000 right now, then you got about $40,000 worth of equity. And some of these banks and lenders will go pretty close to 100 equity. You don't want to go that far for sure, but a lot of people like to keep it in the 80% range. So you're going from using 60 to 80, you've got about $20,000 to play with. So let's just say your first mortgage is $60,000. Your home is worth $100,000. So you realistically, I like to just draw on here just because I got it. Not that this is helping you in any way, shape, form, or fashion. But you got $40,000 of equity. But not, like I said, not all banks will let you use 100% of your equity. So a lot of times they'll keep it to 80%, which would 80% of $100,000, keep the math simple, would be $20,000. Okay, why would I want to do that? Well, there's a couple of reasons, and here's one real life example again. So my parents owned a rental property, and it was, sometimes rental properties are, it was okay, and it was get by, but it had a few problems here and there. Well, what we didn't expect was a humongous windstorm came through, and what it did was this thing had a tin roof, an older tin roof, and it kind of peeled it back like a sardine can. So all of a sudden you had this gaping hole going right straight into their house. So what do? You panic. You got to get that thing fixed. Well, let's just say you don't have enough cash in the bank to cover that, because that's an expensive repair. I don't know if you've ever had to fix a roof before, but certainly under fire like that, it can be an expensive prospect. So what do? Well, you've got to call the roof people, make sure that they're coming, but you have to have that confidence that I have got the money, or at least the access to money, to pay to get this thing fixed. And that's where the HELOC comes in. It's the access to money. So if you had a $20,000 home equity line of credit, in your mind, I can write them a check. I know I have that confidence that I can get this thing fixed really quickly and not have to wait for insurance to come and look at it and pray about it and mail me a check and do all these things that can take some time. You got to do something quickly, as fast as you possibly can. You don't want to, God forbid, and this happened on a weekend, it happened on a Saturday, so had they not had access to a home equity line of credit, you'd have to wait till Monday, try to get a loan application in, wait for the appraisal, the 3-day right of rescission. You got all kinds of things that you could have to do to make sure that you had access to this money. But instead, when you got a home equity line of credit, you got the peace of mind. I've got $20,000. If some emergency happens, a medical expense, a roof getting torn off, I have got this money I know I can get access to. And some people will say, well, why not a credit card? Well, if you do that, cash advance fees, interest rates, obscene. So there's a lot of advantages of going with a home equity line of credit versus a credit card. Many factors. So, is it for everybody? No. Who's it not for? If you're not good with money, if either one of you spouses are not good with money, because if you go get a home equity line of credit, go out and buy you a boat or something foolishness that you don't really need, you can get yourself in hock really quickly. And I've seen that happen a few times. But if you can manage money, you trust yourself. If you're scared of the HELOC's probably an okay product for you. If this doesn't intimidate you a little bit, you may not have the healthy fear that you need. But if you got a little bit of healthy fear, then this product can just sit there on the sidelines, especially if you can find a bank that will do them for no closing cost or very low closing cost. That way it doesn't really, you're not out that much. It's just sitting here if you need it. Hopefully you'll never need it, and it can just go away and go bye-bye when you want it to. But in the meantime, you got that peace of mind that we're all looking for and that we all crave in our lives. And you can do that with the old HELOC. So hopefully you've enjoyed this. That's the quick and dirty on it. But, you know, usually, even if you have to pay some closing costs on these, it's not much. If you shop around, you can just about always find somebody out there running some kind of promotion to either pay a good portion of the closing costs or, in a lot of cases, pay all those closing costs for you. And the interest rate's usually flexible. It's tied to prime rate a lot of times, so which is not great right now, but you know, it's still, and another reason why you don't want to use it except for emergencies. You don't want to just use this to be using it, but it's good to have if you have an emergency. It's always going to have a better interest rate than a credit card would. And you don't have that cash advance fee and blah, 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 blah that you might have if you needed cash fast going any other route. So that is my spiel on the HELOCs, and I've made a lot of these. I don't remember anybody complaining or ever coming back and saying, oh man, you talked me into something that I hated. They just, either they didn't use it or it came in super handy for them and they were very thankful. So that will be hopefully the case for you if you ever decide to dip into that pot. Anyway, hope you guys enjoyed this. I will see you next time. You can read my bad handwriting again. I got to work on that. 53 years old, a little late to the game to do that, but it's never really too late.